Ready when you are, Kelly.
All righty. So, hi, everybody. Thank you for joining us today. My name is Kelly Gold with Alliance Cost Containment. And today we're going to hear from Adam Mathis of EF Cost Recovery on how to take advantage of the Employee Retention Tax Credit. By way of a brief introduction, Alliance Cost Containment assists our clients with EBITDA improvement through the reduction of indirect procurement expenses. We typically work with companies that have more than $100 million in revenue, and we're often connected to these clients through relationships that we establish with mid-market private equity firms. ACC manages roughly 30, 35 plus indirect expense categories for companies nationwide. They make up somewhere between 10 and 50% of all dollars spent with third-party suppliers. But in nearly every instance, companies consider these to be non-core or non-mission critical costs. In the aggregate, though, I think a lot of you may know this, they have a very meaningful impact on EBITDA and enterprise valuations if they're managed effectively. If your PE portfolio or if your company could use assistance with an indirect procurement strategy, please feel free to reach out to us. And without further ado, I'd like to introduce Adam Mathis from EF Cost Recovery to take it away.
Thanks a lot, Kelly. And thanks everybody for joining today. I know it's lunchtime, so I will be as efficient as possible here and kind of fly through these slides, and then I'll be available once we wrap this presentation up to answer any questions that you may have. Just to give you a brief overview on EF Cost Recovery, we are a niche cost recovery firm located in southeastern Massachusetts. Been around about 11 years now, focused predominantly on the research and development tax credit, the work opportunity tax credit, cost segregation studies, and now most recently the employee retention credit, which is what we're here to talk about today. And I'm going to jump right into it. So what is the employee retention tax credit? It's a fully refundable payroll tax credit that was signed into law as part of the first round of stimulus a little over a year ago now, which is hard to believe. And then it was expanded at the end of 2020 and made retroactive. There's some really important changes there. But really what it is, it's, as I said, fully refundable. It's payroll tax credit. It's claimed on your quarterly payroll tax filings, either timely or amended. And it can mean some significant dollars for your organization. Just skip right by this one for me, Kelly. So who is eligible? How do you become eligible for the ERC? We really have to look at 2020 and 2021 in two different independent silos because the rules are different. So for 2020, to be eligible, you either had to have operations that were fully or partially suspended as a result of a government order, or experienced a 50% reduction in quarterly receipts compared to the same quarter in 2019. Now, once you do determine your eligibility, if you are eligible for any one quarter or any of the 3 quarters that you could claim in 2020, there's some interplay with full-time employees. So if you have 100 full-time employees or less, you can use wages and eligible expenses paid to any employee, both working or not working. If your organization has over 100 full-time employees, then that would be restricted to expenses related to employees who were being compensated not to work. Now, you fast forward to 2021, the eligibility parameters are a little bit different. They've made it easier for you to qualify and raise that threshold on full-time employees. So you still have, the first criteria that you can meet, which is your operations being fully or partially suspended due to government order. However, now you only need to show a 20% reduction in quarterly receipts opposed to a 50%. Again, and we're still going to compare your receipts in first quarter 2021 or second quarter 2021 to your receipts in the corresponding quarter in 2019. That's an important thing to remember, is that you're always going to compare your receipts against 2019 to the pre-pandemic levels of your organization. Now, in terms of the full-time employee number, that jumps from 100 all the way to 500. So now if you have 500 or less full-time employees, wages paid to anybody, both working or non-working, can be included in a calculation. Over 500 employees, it would be, again, restricted to eligible expenses paid to people not performing any work. Now, how much can you get from the ERC? Well, I think the next slide is going to kind of show us the breakdown there. Again, we need to look at this in individual silos. So for 2020, if you are eligible, you can earn up to $5,000 per employee for the entire year. For 2021, originally when they extended the program, they only extended it through June 30th. So for the first 2 quarters. Then about a month and a half, 2 months ago, they extended it again to the end of the year. So now in 2021, theoretically, if your organization qualified for first, second, third, and fourth quarters, you could potentially get $28,000 on that employee for the year, okay? So it's up to $7,000 per employee per quarter in 2021. So it's, again, significant dollars, and this is a fully refundable tax credit, which is claimed on your payroll tax quarterly returns. And just to give you an idea of what the ERC could mean to you, okay, when we engaged this client, they had 11 locations here in Massachusetts. We originally spoke to them about going back and doing what we would term a look back study, going back and claiming credits that they were eligible for in 2020. And initially they said, you know what, we don't qualify. We're over 100 full-time employees. We're over 100 employees. Then we explained to them that, the 100 full-time employee is a true full-time employee, not a full-time equivalent. A lot of people, they've spent a lot of time, doing PPP work and determining how many FTEs they have, a full-time equivalent. This is a completely different calculation. This is a actual full-time employee. So we dug in for this client, determined that of their 265 total employees, they had less than 100 full-time employees, which made them eligible for all expenses in the year 2020, which resulted in a tax credit coming back to them in the form of refund checks from the IRS of almost $500,000. Now, the benefits of working with a consultant like us at EF Cost Recovery, we will evaluate and determine your eligibility for the credit and the benefits pursuant to the various COVID relief acts. We'll calculate the credits themselves and then provide reporting of the tax credits, including year-end calculations and supporting documentation. In addition to that, all of our services include 100% no-cost audit defense in the event any claims identified are selected for exam by the IRS or any applicable state taxing authority. On that last, the audit point, I'd just like to point out that, a typical tax statute is 3 years. So you typically have 3 years from time of filing to amend a tax filing and claim a credit. And then the IRS has 3 years from that point to potentially audit you. In the case of the ERC, they have extended that statute to 5 years, which indicates to me and others in our business that the IRS is, they're pretty much saying, we know we need to take a look at some of these claims. They're completely overwhelmed at this point in time, so they want some extra time to be able to do that. And that's where having a professional or a firm like ours really comes in handy. And that's it at the 30,000 foot level. And I'd just kind of like to open it up to everybody who's in attendance. Should you have any questions, I'm happy to answer any and all of them. You'll also notice in the chat before we kicked off, I included my email in there, which Kelly also has here, but I just wanted all of you to have it. All right, I'm just going to jump right into the questions. We have not received our ERC payment for 2020 nor Q1 amounts requested on a 7200 that was faxed in, do you have knowledge as to when the IRS plans on processing the payments? So I guess my question to you, Sharon, would be on the 2020 claims, were those on amended filings? If so, if it was an amended 941, if you submitted 941Xs, that's likely going to be 4 to 6 months for them to process this thing. On a 7200, the IRS guidance there is a 2-week turnaround time, but they're just frankly overwhelmed. We had clients that we submitted 7200s for on February 25th, and they just started receiving checks last week. So it really, if you want to look at that timeline, that'll kind of give you a picture of what you can expect. What is the timeline from start to finish with results? John, that really is dependent upon the complexity of the work. Are we looking at control groups, having to aggregate receipts? But typically 2 to 3 weeks for us to finish our work from start to finish, as long as we get access to payroll and all the reporting that we need. How much time on the client is involved in the implementation process? Very little. We try to be minimalists and make this thing as easy as possible. So it'll start off with a quick engagement call, which most of the times I will go over pretty much what I just went over in these slides as quickly as possible, make sure that the clients don't have any additional questions. And then it's, we sign an engagement letter and we make a request for documentation, which is going to include direct access to payroll reports so that we can pull everything that we need without having to push anything back onto the client.
Adam, I have a couple of questions come in to me. One is, will this impact my PPP forgiveness?
It will not. So, one of the biggest things that you have to be cognizant of when claiming the ERC, especially going backwards, is that you don't have a duplication of benefits. There are specific rules that you cannot duplicate the benefits of the PPP loan and ERC, meaning if you had a PPP loan, either PPP round 1 or PPP round 2 here in 2021, you have to make sure that any wages paid with that PPP money is not included in your calculation with the ERC. So our firm, I can only speak to what we do here, but we'll either gather the documentation that was submitted to the bank for forgiveness, or if you haven't submitted for forgiveness yet, we will work with the client to determine what the appropriate percentages of payroll are to be allocated to the forgiveness, because remember, you have to include at least 60% of W-2 wages to get 100% forgiveness on that. So we'll work with you to maximize the ERC while also maintaining 100% PPP forgiveness.
Okay, thank you. And the other question is, do you get the funds back or do you get credit to be used for future payment of payroll?
Good question. So on an amended filing, so a 941X, those are going to be every time you process a 941X, it will result in an actual refund check coming from the IRS to the business. On a timely filed claim, so if you file this thing timely on a 941 at the end of the second quarter, you can make an election there whether you want a refund or if you want this applied to future tax. We haven't had a single client choose to allow the IRS to hold on to their money any longer than they have to, but that is an option should you want to do that.
Thank you.
Were there any other questions from any of the attendees that I may be able to answer? Again, I'm always available via email or phone. to answer any questions that you may have that you may not want to ask here.
I think if
we're
there are
good.
no more questions, we'll say thank you all very much for attending. And yeah, Adam's contact information is on the screen, and Christina's and mine as well. If you have any questions on this topic or on procurement strategy or cost reduction, please don't hesitate to reach out to any of us, and we'll see you next time.
Thanks very much
Adam,
for
thank you
organizing
very
it,
much
Kelly and
for joining
Christine.
us.